Hello everyone. Today we will have a look at the strategy called Expiry Special. So in this strategy, we'll see for last three expiries, if we use this Expiry Special strategy, how much profit we can make. But our target is 1%, to the profit side, and also 1% to the loss side. Whichever is reached early, we will exit. Okay. In this video, I will show only with the 1% the minimum adjustments, simple adjustments. The part 2 we'll see with the complex adjustment, and also this video I'll make it as a part 1 with the Nifty. Okay, and the next video I will do it with Bank Nifty, where the chances of getting profit is high and little more advanced adjustment. Okay, so this is the plan. Let's start with the Nifty and simple adjustments. 1% is the target, and our time for this is 9:30. We will start and will end by 2:30. Will not stay beyond this because there will be gamma moves after this. Gamma moves is sudden movement in the market to the up or down that suddenly increases the premium, and there is high chances that you will end up in losing. Let's not get into the gamma moves, and there you need system stop losses and advanced adjustments. We'll see it in a different video, but people who are happy with 1%, and that is very good returns just in one day, 1%, and if you do it for 4 weeks, 4%. So maybe some week you may get 2%, some week 0.5% or minus 1%. So overall, we'll keep it 3 to 4% per month. And just by trading 4 days. Okay, that's the plan. And people with higher capital follow these simple steps, and we can earn 3 to 4% easily. So you can also do other strategies, and the remaining capital on expiry you can do this strategy. So overall profit you will be earning little more than that, but only with this strategy aim only 3 to 4%, and it's very simple. Let's get into the Opstra simulator. The idea is to start with the triangle and edge it, that will become iron condor, right? So the adjustments will be done till it becomes straddle. Once we reach the straddle, that means at the money sell, PE and CE sell, then we'll roll back to triangle again. We'll see the adjustment. I mean the premiums will shift the matching premiums according to the our required matching premiums. Okay, let's see how do we do it. We'll understand more. Let's start with the premiums which is less than 20. Here we are going to sell 10 lots. So here the idea is to make our mindset, how do we see 10 lots and how do we see one lot, because the M to M with one lot will be like lower, and we always try to aim for a bigger target, and that ends up losing the money. Okay, that's why start with more than 5 lots if you want to earn, but practice with one lot. That's still okay even if you don't get the profit initially. Even if you practice for 6 months, that is still fine because you will have the market for lifelong. Don't be in hurry and start losing it. Let's see how much capital is required for one lot. So as I said, it is iron count strategy. Let's create. Okay, I think I'll reset and then create iron condor. So this is the iron condor. The capital required is approximately 50,000. Okay, but I suggest you have 1 lakh per lot. So if you want to sell 10 lakhs, sorry, 10 lots, you should have 10 lakhs as your capital. So we will calculate the profit with respect to 1 lakh per lot. Okay, so I'm selling 10 lots, hence we are going to use 10 lakhs as the capital. So we'll see our profit according to the 10 lakhs capital. So let's start. So the idea is whenever any of this premium is less than 50% of the other, will exit and bring to the closer one. Okay, we'll keep doing that until it becomes straddle, and we will shift back to strangle one by one. Let's get in. So I'll start with 13 minutes. So no worry, we are more than 50%. The difference should be more than 50%. Now I'll go with 5%. It is almost 50%, but still I'll continue. Now I will exit this leg, and let's see if we have the matching 15 in the C side. If not, we will have to adjust the P side. Yeah, we have close to 15. Don't go for 25 or 30. That is not at all matching, but 15 is still okay. But if you see this, if we exit the P side here, and this will be like become very low premium, and will have 7 and 5. But when you are doing with bigger capital, that is still a good amount. So with 10 lots, I think we'll go with this, and it is close to 15. I'm exiting this now. C leg, right, 7.65. So let's continue by 30 minutes. If there is a much difference, we'll switch back and see which point it has crossed more than 50%. I think, yeah, this is still okay. This place, we let's see if we have to come to straddle or this. I mean, if there is a premium close to this, we'll exit P because we are still not in the straddle. It is still a strangle. Now I'll get option chain and 22. Sorry, which one we had to exit? So this is 22 and this is 9.5. Yeah, I think we have a matching premium at 350, still away from the straddle. I will sell this 10 lots and I will exit from the P here with a 9.45. So when we get 10%, 1% of the capital, that is 10 lakhs, we can exit, but I'll take it till the 230 just to see how we are earning the profit, how much more we could have earned. So yeah, so these two we have to see now. If any of that becomes more than 50% or less than 50%, we will have to exit. So now we have the profit more than 1%. We can exit. I will take you till 230 and see if we can earn more percent, less than 1%. But so our target is 10%, sorry, 1% already reached. So we would have exited with this strategy. For more information, I think I would like to take you through this. Now we can exit here, P, and do we have the matching premium or close to matching premium at straddle, exactly at the straddle P side. Let's have a look. If not, we will use exit this leg and take a premium close to this. That's how we have to work in this strategy. So P side, is there any close to 20? Okay, this is having more. And what we'll do, instead of going into the risk, we already in profit. Let's slowly move away from the straddle, and I think we have 3 rupees difference here. Let's use this itself, and I'm going to exit this leg 22.5. Now we have these two legs. Let's see how it works. We'll go by 15 minutes. Okay, so the difference is more than 50%. So now I would like to come closer and match to this premium. Let's see if we have in the CE side. I don't want to go below 5, the P side. So this is closer and it is less than 20. So we'll not have a much risk of going above 20 because we are already in profit. Let's book this at 5. So premiums are very low because of the low weeks. India weeks, I hope you all are you know, we are in the low premium times. So again, we can see how it works and what is the time. We still have time, and this is okay within our limit. These strategies most of the time give us the profit, and there are some scenarios where you might lose. So that time, control yourself and exit at 1% and minus 1%. Don't worry, 90% of the times these strategies wins, but 10% of the times you should have the guts to exit at 1%. Now I will see. So we are still in the strangle. If we have a closer premium, it will come to straddle, or else we will move away with the strangle. Let's have a look which premium we can bring, whether this 350 C is having close to 18. No, there is difference. So I will check if this side is okay. Okay, this side we still have a decent premium, but see the difference is already almost half of it. I think we can still continue with this. See, well, first thing 1% is crossed. Let's see if the M2M is fluctuating more in this moment, and also see the payoff graph. So we are in the maximum profit zone. Let's go by 5 minutes, and if we cross this area, and let's have a look now, the premium, this and this, okay, the difference is going high, and still we are in a good profit. We can still proceed with going further because your profit is not fluctuating much. So initially we followed 50% rule, and the premiums are very low, and we have taken the dynamic decision of maintaining the M2M. If it is fluctuating, we'll simply exit because there is no matching premiums. Now we can see if there is any matching premiums, either to 19 or 7. We'll go with that. If not, we'll put a system top stop loss in, especially in this. If it goes above 25, so say 5, not 5%, so say 30%, you can keep a system stop loss. are equivalent to this amount. You can keep a stop loss that is 26, and then you can, if it reaches 26, you can exit. That way you can execute. I'm giving different ideas how you can manage this trade. So we can go for this, or upper side. This is still a closer one, and we'll come to exactly the straddle, and I am going to exit 7. So don't fix to a same criteria of matching the premiums. So I have given a couple of ideas how we can manage this trade when the premiums are not matching. So I'll exit this now. So market is always dynamic, and you learn to make the dynamic adjustments. You have to understand the logics, understand the premium behavior, understand the analytics, and then adjust your strategies accordingly. I think we'll go for the next week. We already crossed, uh, you know, 1% mark. I will just complete it. What if we could have waited till 5? But I have not seen in between. Yeah, I mean, this is 17.6%, but 17,600. But yeah, so this with advanced adjustments, I will explain you to wait till 2:30 and how to maximize the profit in the part 2 video. But whereas now, as soon as you enter 1% exit, that is for especially the high capital guys, that's a good cap profit, and even for the beginners, simple adjustments. Okay, now let's get into the week 2, that is 23rd. So we are not seeing the charts. The advanced methods we will also utilize chart and see how do I we maximize the profit. But this is very simple method, and you can earn simple money without much worry. And I prefer this method, 1% in one day, along with my other strategies. But if I'm not taking any other strategies, if I have cool mind, I will also do the mix up the advanced and the simple ones. So once you understand the logic, you can also do that. So we are at 1700. So we'll start with less than 20 premium, and we have this one, and here this. So 10 lots we are going to use, and 1 is to 10, that is somewhere here, by, and to the down we have 1 is to 10. So I mean less than. So these are all having 5 paisa difference. Let's bring it closer for your margin benefit. So now, so this is the area maximum profit, and this the range is around 250 points or 260 points. Let's start. So minus 1%, if you reach, you have to exit. And I think initially the off 50% difference, right? As soon as we reach that point, we'll exit. So in this time period that has happened, but we cannot go by 1 minute here. Let's exit at 7, since we are 200 points away from the two legs, between the two legs. And I would like to see if there is any premium matching to this, because we're still in the beginning of the expiry day. So we have exited P, and I would like to see if anything close to 20. Yeah, this one we can take, and I will exit the 16.6 at 7 rupees. Now these are the two things we have. Let's go by 15 minutes. Come back 5 minutes. Is there anything we could have done? Another 5 minutes. No, this is crossing 50% mark in this place. So I would See, we are almost 100 points away from the straddle, so we can still try for 36 because we are in a good beginning of the expiry and not in the straddle. If there is no matching premium, we will have to roll back to this 36 and we'll have to see here if anything matching. I think we can still go with this about 23 is a good premium. And see, there is a good difference, but the premium is high. So you have to use the system stop loss as long as M2M is not fluctuating very high. Use the system to stop losses and exit. Say if it reaches for another 10 rupees, for example, 50% extra of this 12 or 15 rupees, you can exit. Or maybe 45 as soon as it crosses, there will be a huge difference, you can exit. But see the M2M fluctuation also. If there is a too much difference, you can exit and go away with the lesser premium strikes. So now I'll have to exit this P.7. I think there is not much change. Not much change. Okay. I'm just seeing this premium. If it has made a lot of change, I would have got exited. Now we can wait any of these to make the 50% difference. No. No. Okay, at this point, probably I'll go back by. Okay, this is 50%, right? Now we are in the straddle, are we? Still have 15% if there is anything matching 28. If not, I'll match this and go away. So to the C side, we'll see if there is anything above 20. So this is still close to 28. I think we can go C side. Little extra risk is also fine. And we will exit 14.95. Okay, not much difference. Can still go ahead. I'll go by 5 minutes. Still we can go with this. So there is, so we have cost 1%. So I would like to execute one more week and I am just exiting with this. So 1% we have expiry. Let's start from the beginning. So we'll just select less than 20 premium. So I think this was the closest, but here there is a more difference. So I will just start with this and this and 10% difference, 10% hedges. I mean, you don't have to do it for exactly 10%, approximately 10%. So we have now this straddle and we'll go by 15 minutes. I'll come to this P&L table so that we can watch the premium differences. So 13.6. So let's see, we are still in the straddle strangle. We can come to straddle or if we have to move away by seeing the premiums. I think it was we had 31 or 2, right? Yeah, so we can still go with this because that's still in the straddle. And let's exit 13.6. So not much difference. It's close to more than 0.5%. And this one, let's go by 5 minutes, more than 0.5%. Still good. 0.6%. Okay, so here we have a difference of more than 50%. So we are in the straddle. We will have to match this premium and move away from the P side. Let's see. Yeah, so this is having closest premium, and we will exit the 40.75. And the difference more here, still okay with the difference. Yeah, so at this point we are more than 50. No, here we'll have to exit and see if we can match any of these premiums. So from the P side, if we get this premium, we'll come back to straddle. If not, we'll move away. So sorry, P side, right? Somewhere less than 20 or 25. Yeah, this is still okay, and we are within the straddle. So we'll exit this. Okay, we'll move by 5 minutes now. Close to 1%. I think somewhere, okay, somewhere it has jumped within these 5 minutes, but still okay. We can manage. We are in the straddle. Let's move away in this premium close to 11. Yeah, this is close to 11. See, if you don't find matching or close to matching premiums in any of this, you can also move both the legs. There is no fixed rule. You can also move this leg and this leg if you don't find the matching from the away or close premiums. So now I will exit this at 32.6. It's all about your analytics here, your calculations. Keep the system stop losses so that you will have, you don't have to worry for sudden comma moves or sudden movements. So whatever is the profit or loss, I will exit at 230. That is another condition we have. Now at this point, did we miss exiting any place? No. Here we were fine. So here we will see if we can come close here or here. At P, let's see if we get somewhere around 14 premium. No, this is more, and since we have 4.5 and the P side, C side also you just go for it because we are almost end of our time. So you can exit here also another 15 minutes. Let me come out of this. And so the maximum profit is 12,000. Another 15 minutes. Did we get chance to exit somewhere here? Sorry, yeah, there is some good difference in the premium, right? I think this leg you can, I mean, see the difference. Either you move close or exit in the five last 10 minutes. Okay, I will still, so with the 0.8% you exit, I'll still go for this premium and come closer and let's see what happens. Closest is only 10. We don't have much closer. See here also, we don't have close premium. So the better is to exit. But if you wait for those 10 minutes by adjusting, what could have happened? Okay, okay. So 0.66%. Okay, so you could have also exited at 0.8%. So all the 3 weeks we end up in profit. So that's why this is a high probability strategy. So in one day, that is also like 3 4 hours, right? 4 hours or something. So you work, and with these simple adjustments, you earn 1% or little higher than 3% in 3 weeks. So please subscribe and like, and also comment in the comment box asking for the part two. So if I think you like this video, we'll make the advanced one where you can increase the profit, and also we'll do it in the bank nifty. That is little more complex to do there, but the profit can be little higher than this. Okay, we'll also do the calendar strategies. Don't forget to subscribe. Thank you for watching and have a nice time. Bye bye.